All right. Welcome everyone to our Know What You Owe Student Loan Exit Strategy Workshop. My name is Yaslin Alonso. I am the program manager for the Financial Wellness Program. And as I mentioned earlier today, I have Brenda with me, who is one of our peer advisors in the financial aid office. She will be assisting with the chat. So if at any point you do have questions, she will be answering them. I will also do my best to monitor the chat. But if I don't get to your question, we will have time at the very end for any questions that I wasn't able to get to. I do want to emphasize that this workshop will focus on federal and dream loans. We will not cover private loans. So if you do have a private loan, just know that I will not be talking about that. You are more than welcome to still stay. But if you feel that, there isn't anything here, then you can leave as well. But again, it's going to focus on federal and dream loan. So again, if you have any questions, we will do our best to monitor the chat. But without further ado, we will go ahead and get started. All right. So we have quite a lot to cover today, and today's agenda is broken up into the following. We will focus on the exit loan requirements for both the federal and dream loans, and then we will also talk about the repayment options available. We will then talk about student loan forgiveness programs for federal loans only. Unfortunately, there is no student loan forgiveness for the Dream Loan. And then at the very end, we will briefly talk about preventing scam. Unfortunately, it does happen to students, and so we would just want to make sure that you all have the information to identify when it's happening and what you can do if it does happen to you. And then we'll just end with some resources and some ways for you to contact us. All right. So, just to out of curiosity, how many of you are graduating either at the end of spring or summer? And you could put I am, thumbs up, just to get a feel for the room. Okay, so we have someone graduating at the end of spring. We have some thumbs up. Awesome. Okay, well, first of all, congratulations. You're almost there. We're almost at the end of the spring quarter. It's a huge milestone, and so hopefully you all are proud of yourselves as you are nearing the end of your undergraduate career. For the folks who still have time, it's never too late to get this information. But here are just a few things to do before you graduate from UCR. So number one is you want to make sure that all your fees are paid at UCR. So just get that taken care of. And then I'm assuming since you're here in this loan workshop that you've taken out loans at some point, you will need to complete exit counseling and then also get into the habit of reviewing your loan borrowing history. So I will show you how you can do that if you have not done so. All right. So if you have taken out a federal loan, to access the federal exit counseling, you will need to go to studentaid.gov and you're going to click on where it says, or hover your mouse where it says loan repayment and click on where it says loan exit counseling. So it's then going to take you to here and you want to click on the one that says I'm an undergraduate student. So if later on you end up going to graduate school, you end up taking loans, you'll do a very similar process, but then you would just pick the second option. But in this case, it would be undergrad. So you'll log in with your FSA credentials, and typically it takes about 30 minutes to complete. Once you've completed it, it can take about, I would say, like 5 to 7 business days for our office to receive that information that's been completed, and then you'll notice that that requirement would go away on your end. So make sure you give yourself enough time to complete the exit counseling. And some things that it will go over is basically an overview of the loans that you've taken out, some terminology, and I believe this is where you will also have a chance to review some of the repayment options available to you. So this is for federal loans. When it comes to the dream loan, it's a little bit differently. So Students graduating in spring will receive an email from Student Business Services and Heartland ECSI, which is the loan servicer that they use sometime in May. So if it's most likely that you've already received communication or you will in the next few weeks. And it's going to give you instructions on how to complete the exit loan requirement. So in the next slide, I will show you an example of the emails that you will get from Student Business Services and Heartland ECSI. So this right here on the left-hand side is just a screenshot of how it would look like when you go and access the Dream Loan Exit Counseling. So this is an example of an email from SBS. This is will tell you that, you're expected to graduate at the end of the quarter. And so because of that, you are expected to complete the exit loan counseling. So this will be from SBS. And then from the loan servicer, it will look something like this. So again, make sure that you are just up to date with your emails. Most likely you've already received communication, but if you haven't, either because you're graduating in a different quarter, this is just what is to be expected when the time comes. All right. And then just a little bit about the Dream Loan, because it is a little bit differently than the federal loan. This is just a sample of what the Dream Exit Counseling will look like. So just a few things that I've highlighted is that it will provide you a schedule of your repayments. So it will tell you when your payment is set to begin, how long these payments will last, the interest rates on the loan, your principal and the interest costs. So it does look a little bit differently than the federal exit counseling. But again, this is how it would look like if you have a dream loan. Okay. So now moving on, we're going to talk about ways in which you can review your borrowing history. So first things first is talking about when repayment begins. So usually it begins 6 months after you graduate from UCR. So this includes for the subsidized, the unsubsidized, and the dream loans. And again, it will tell you on your loan exit loan counseling when repayment should begin. And usually afterwards, your loan servicer will reach out to you and let you know, hey, your grace period has ended. This is when you need to start paying. And so uh, just be aware of that. Um, on the flip side, if you have Parent Plus loans, your parents took one out, repayment does technically begin immediately. However, they can request a 6 month deferment after either you graduate, you leave school, or you drop below half time. So hopefully you've had conversations with your parents if you have taken out a Parent Plus loan to just know where you are in that repayment process. But everything else, it's going to be 6 months after you graduate. Okay. So first thing, we're going to talk about the federal loans, and then I'll briefly mention about the dream loans. So if you do have federal loans, the first thing that you want to do is log into your FSA account. So this is just an example of how it's going to look like. Um, if you have had like a Pell Grant throughout your undergraduate career, it's also going to show the grants. But if you've only taken out loans, then you'll see the loans on here. Um, so because of this, we're going to focus on loans. So just some terminology to know. When we talk about the principal, that's the original balance or the original amount of money that of the loan that you borrowed. So let's say, for example, you only took out, like in this example, 6,833. That was the original amount that you took out. But sometimes interest will be on there. So interest is a fixed rate added daily to your principal balance. So I've included the formula. So you're going to take the interest rate, multiply that by the principal balance to see how much yearly interest is being added. And then if you want to see how much that is on a daily, you're going to take the yearly interest added and divide that by 365 days to get the daily interest. So in this example, we have that $43 of interest has been added to the principal. And so the total balance is going to be the sum of your principal and the interest. So the total balance in this example will be 6,876. So it's always just good to get into the habit of reviewing your loan borrowing history. You can do that by logging into your FSA account. Okay. And then before we move on to identifying your loan servicer, with the Dream Loan, you can access that by going into your Heartland ECSI account. Again, they are the only loan servicer that manages the Dream Loan, so you'll be able to see how like your history of taking out the Dream Loan, whether that's been one loan, two, and so on. Okay. So now we're going to talk about identifying your loan servicer because this is a really important step that I often see students, especially when they're taking out a loan for the first time, that they tend to forget this step. So your loan servicer is basically a company that the Department of Education will use, and your loan servicer manages the billing and administrative tasks of your loan. So, when you go, especially for the federal loan, when you log into your FSA account, it's going to show you who your loans are being serviced by. So this is just an example of one. So in this example, it's saying that Great Lakes is the loan servicer, and it's going to show you also like all the loans that you've taken out. It's also going to direct you to, when you are ready to make payments, it's going to take you directly to your loan servicer website. And then if you haven't done so, you will need to create an account with them. And so again, when the time comes, it's going to be through them, not through FSA. It's not through UCR. It's going to be your loan servicer. Okay. The other thing too is that throughout the years that I've been in financial aid, there has been quite a few changes with the loan servicers that the Department of Education uses. So currently, these are the loan servicers that they use. So I've just provided the phone number on there, but again, if when you log into your FSA account, it will show more information. So like the website and just other ways to contact your loan servicer. So these are for federal loans, but as I've mentioned before, the Dream Loan will always be managed by ECSI, so you don't have to worry about memorizing the other ones. It's always going to be ECSI for the Dream Loan. Okay. And let me briefly just check the chat just to see. Okay, awesome. Um, any questions so far? You can put in the chat, you can unmute yourself before I dive into the repayment plans. No? All right. Awesome. So repayment plans. Um, with the Dream Loan, there's actually just only one, so this is kind of easy to remember, and that's the standard repayment plan. So minimum payments do begin at $50 per month and are expected to be paid back over a 10-year period. But there is no prepayment penalty if you want to make payments on your loan early or you want to make more than the minimum payment. So that's something to keep in mind. So if you kind of remember the slide of the exit loan counseling where it shows you a schedule of your payments, if you want to make more than like let's say your payment is $50 per month, if you want to make a higher payment, you definitely can, and there's no penalty to do that. So just keep that in mind. So this is for the Dream Loan. It's only one repayment plan available to you all. Okay. All right. On the flip side, with the federal loan repayment plans, there are quite a bit more options. However, because of just the many changes happening within this administration, a lot of it will change. So when you go to studentaid.gov, there is a note on there, and I've provided the screenshot that says the U.S. Department of Education is implementing significant changes to the federal student aid programs. We are working to update studentaid.gov to reflect those changes, and in the meantime, stay current on these big change updates. So I've included the QR code to the website and where you can actually click on there to stay up to date. But for now, the information that I'm presenting to you is current, but just keep in mind that there will be significant changes, and so we highly recommend that you stay up to date with those changes. Okay. All right. So just some facts is you can pick from repayment plans that base your monthly payment on your income or plans that give you a fixed monthly payment. Repayment plans based on your income are a smart choice to lower your payment. The lower your income or the larger your family size, the less you'll pay each month. And then typically, if you don't pick a repayment plan, then your loan servicer will place you on the standard repayment plan, which is pretty much the default. So that's 10 years that you're given to repay back your loans. And just depending on your loan balance, it might end up being a higher monthly payment than any other options. So, again, these are just things to keep in mind as you are reviewing the different repayment options available to you. Um, so kind of one way to think about it is that there are two categories. There are fixed repayment plans, which under that category there are three, and then there are the income-driven repayment plans, which there are also another three. Um, so you want to just pick the one that's best for you. And we'll talk about a tool that you can use that can help you make that decision. So I'm just going to go one by one on what they are, and then towards like the end of this section, I'll show you a tool that you can use that can help you with making a decision. So the first one, like I said, is the default one, the standard repayment plan. Loans eligible on these will be the subsidized and unsubsidized and Alt Plus loans. And any consolidation loans. So typically payments are a fixed amount that ensures your loans are paid off within 10 years. And then if you have consolidation loans, usually it's within 10 to 30 years. But for the most part, you have 10 years to finish paying off your loan. So this is the very first one. The second one is called the graduated repayment plan. So very similar to what loans are available, but how it works is that payments are lower at first and then they increase every 2 years. You get the same amount, you get 10 years to repay off your loan. If you have consolidation loans, then it's going to be 10 to 30 years. All right. And then the last one on the fixed repayment plans is called the extended repayment plan. So for this one, you must have more than $30,000 in outstanding direct loans or more than 30,000 in outstanding FFEL program loans. So the majority of you don't have to worry about that, but just know you have to have more than $30,000. And you can select whether you want it to be fixed or graduated. And graduate just means like it's going to increase every 2 years. But unlike the other two options that we looked at, you have 25 years to finish paying off your loans. So this is the extended repayment plan. Okay. Now we're going to switch to the income-based repayment plans, and currently there are three, but again, things are changing, so just bear with the changes, but for now, these are the ones available. So this one is the pay plan. So to be eligible, you must be a new borrower on or after October 1st, 2007, and must have received a disbursement of a direct loan on or after October 1st. And very similar to what we've seen in the previous repayment plans, these are the loan types that are eligible under this. How payment will be is that it's 10% of your discretionary income, but never more than what you would pay under the 10-year standard repayment plan. And you'll notice too, as I talk about the last two income-based repayment plans, that they are very similar. Um, so again, you just want to make sure you're picking the one that's best for you. This next one is IBR. So these are all the different types of loans that are eligible under this plan. But payments will either be 10% or 15% of your discretionary income, depending on when you received your first loans, but never more than what you would pay under the 10-year standard repayment plan. And then the last one is ICR. So as you can see, very, very similar names. And again, very similar on what loan types are eligible for this plan, but repayment will either be the lesser of 20% of your discretionary income or the amount you would pay on a repayment plan with a fixed payment over 12 years, adjusted according to your income. So another thing to know as well that let's say after you've reviewed which repayment plan would be best for you, you've decided to go with like an income-based repayment plan. With those, you do have to recertify every year, whereas if you were to pick a fixed repayment plan, you don't have to do that because those are going to be the same every pretty much every month. But with the income base, things change. Your income can change, your family size can change. And so that's why they have that extra step of like you have to recertify every year. Okay. And so this right here kind of takes you to where you would go to request if you were to go more for like an income-based repayment plan. So this, I've included the QR code directly to the link, which would be on studentaid.gov. If you are a new applicant, you will select the first one, but then if you are returning borrower, it would be the second one. So kind of what I was saying, you would need to recertify, or if you want to make changes, you most definitely can. And then this information is going to be sent to your loan servicer. So very important to keep that in mind. Um, the other thing too is that you can change plans. So, for example, let's say, initially you decided I'm going to do the standard repayment plan, but later on you find that it's not feasible for you. You find it that you want to make change, you most definitely can. You can switch to a different plan anytime. You just want to make sure that your loan servicer is receiving these different changes. But again, you can go on studentaid.gov for more information about these different repayment plans that I've mentioned. Okay. All right, and some tools to use. The biggest one is going to be the loan simulator. So you'll go to studentaid.gov, you're going to hover your mouse where it says loan repayment and click on loan simulator. And this is how it's going to look like. So it's basically three different calculators available to you. The one that you want to use is going to be the first one where it says, I want to find the best student loan repayment strategy. So you're going to log in. It's best that you log in because it's going to have all of the information on there and it's just going to automatically input that into the calculator to give you what your monthly estimates would be based on your goal. So you can see how you can lower your student loan payment. You can see how you can pay it off faster, or if you decide to consolidate, what that would look like. So in the next slide, I'm going to just show you a quick video that talks a little bit more about the loan simulator. I will also just quickly mention that if you do have a dream loan, you could still use this loan simulator. You would just need to input it manually, your information, to kind of just get an idea of what the standard repayment plan will look like, your monthlies. But again, just this is an option, but mostly this would be more for federal student loan borrowers. Okay. So some things to do during your grace or deferment period is to consider your income and expenses and create a budget, right? So if you don't have a budget now, I would encourage you to, at some point, get into the habit of creating a budget. And I only say this is because, your expenses as a college student are going to be vastly different from after you graduate. Some of you maybe have jobs lined up, or if you're in the process of trying to find a job, you might have some expenses that you didn't have before, and so on. And so this will also help you with selecting the best repayment plan available to you. So I did mention this, especially for the federal loans, but again, if you have a dream loan, it's only the standard. Um, and then the other thing too that I also wanted to mention is just to stay up to date with your loan servicer, right? So if you move, if something changes, you just want to make sure that your loan servicer has your correct contact information for when the time comes to start making payments on your loan. Okay. Sorry about that. So this is kind of just a little bit more. So I did mention, picking a repayment plan based on your budget. The other thing too, that I wanted to just mention is that you can consider enrolling in autopay to receive a 0.25% interest rate reduction, and this is for federal loans only. So more information about that is on the student aid website. Okay. So now let's talk about what happens if you are experiencing financial hardship and you can't afford to make payments. You do have options. So the last thing that you want to do is not make payments on your loans. But if you are facing financial hardship, there are a few options. So the first one that I want to talk about is deferment. So this allows you to temporarily stop making payments on your federal loans and also on your dream loan. And interest will not accrue if you have a subsidized loan. So with the dream loan, it is a type of subsidized loan, so it will qualify under this. But most deferments are not automatic, so you do have to inform your loan servicer that you want to enter into deferment. So some types of deferments is you're enrolled in at least half time at an eligible college or career school. So let's say you go to a graduate program. Sometimes that's automatic, but you still want to make sure that they've received that. Because and I'll just share from personal experience, when I went to graduate school, my loans were not automatically placed in deferment. I did have to contact my loan servicer. So kind of just keep that in mind. This also is if you are enrolled in an approved graduate fellowship program, you're unemployed or experiencing economic hardship, but just note that you have a maximum of 3 years to use this. This isn't saying like you're going to be unemployed or experiencing for the consecutively 3 years, but let's say you were unemployed for 2 months, so that's when the clock starts, and then let's say you were able to secure a job, but then again something happened that you're experiencing economic hardship, so it like stops and starts, but you have like up to 3 years to use this type. The other option on here is if you're serving on active duty, you are receiving cancer treatment, and for the 6 month period after treatment ends, you're enrolled in an approved rehab program, or your parent took out a Parent Plus loan to help pay for your education. So again, these are just types of deferments, and so you want to make sure that you just communicate that with your loan servicer. And let me see if we have a question so far. Great question. So will interest accrue on unsubsidized loans that are deferred? Yes. So they will accrue, but if you have subsidized, it will not. And this is if you are deferring on those loans. And then forbearance, very similar to deferment in the sense that you're pausing payments. However, interest does accrue during this time period, and that includes subsidized and unsubsidized loans and the dream loan. So there are two types, and there's general forbearance and there's mandatory forbearance. With general forbearance, this includes if you're facing financial difficulties, you have medical expenses, a change in employment, or any other reasons acceptable to your loan servicer. And then the mandatory forbearance is includes like if you're serving in a medical or dental internship or residency program, you have an AmeriCorps position for which you received a National Service Award, you qualify for partial repayment of your loans under the U.S. Department of Defense Student Loan Repayment Program. You are a member of the National Guard and have been activated by a governor, but you are not eligible for a military deferment. Your total loan amount you owe each month is 20% or more of your total monthly gross income, and this is up to 3 years. Or you are performing a teaching service that would qualify you for a teacher loan forgiveness. Um, so this again is forbearance. Very similar to deferment, just the biggest difference is the way interest works. So if you were to defer, you were to go with that option, interest doesn't accrue if you have subsidized, but it does if you have unsubsidized loans. And then with forbearance, interest accrues on all loans. So dream loan, subsidized and unsubsidized. All right. And then the next option that is available to you is loan consolidation. Just know that this is only available for federal loans. So basically, if you have multiple federal student loans, you can combine them into one direct consolidation loan with a fixed interest rate based on the average of the interest rates on the loans being consolidated. So sometimes people prefer this option, especially if they've taken out multiple loans and they just want to organize it into one nice loan. If you do go with this option, you do have to do it during your grace period. Because sometimes, again, as we were looking at the different repayment options, there might be some repayment plans that are available if you end up consolidating. So the other thing too is that this is a free process. So uh, if you never have to pay for this. You can do this on studentaid.gov. Okay. And so on here, some things is that, again, if you are experiencing difficulties, you have options. The last thing that we want you to happen to you is that you default on your loans. So, what we mean by that, basically, default is when you fail to make loan payments for more than 270 days. Um, if this does happen, there is a possibility that future financial aid assistance will not be made available to you. So let's say down the line you are considering going to graduate school. If you have defaulted on your loans, there's a possibility that you won't get graduate aid. And then the other thing too is that it does stay on your credit report for up to 7 years. So um, we definitely don't want this to happen because 7 years is quite a long time. And so again, we just want to make sure that you are staying in communication with your loan servicer. So, for federal loans, definitely visit studentaid.gov for more information about that. And then, if you have a dream loan, we ask you that you contact Student Business Services, either by phone or by email if you are experiencing hardship, so that way they can help you. So, Student Business Services, they help with the Dream Loan, and they can help especially provide communication with Heartland ECSI. And again, this is only if you have the Dream Loan. Okay. So now, any questions so far before we move on to just the forgiveness programs? No? Okay. So these next few slides are going to focus on federal loans. Unfortunately, there are no forgiveness programs for Dream Loan. Okay. So the very first one, the popular one, is the Public Service Forgiveness Plan. So this forgives the remaining balance on your direct loans after you have made 120 qualifying monthly payments, which ends up being 10 years under a qualifying repayment plan while working full-time for a qualifying employer. They do have a PSLF help tool to see if you are eligible for this program. So you can go to studentaid.gov for more information to do that. And so I've just provided screenshots of how it would look like if you were to use the help tool. So it's best that you log into your account so that way it can use your information. So this is the first one. And again, things are changing. This is what's for now, this plan, but it's possible that they might make changes to the public service forgiveness plan. You never know, so that's why it's very important that you stay up to date with these changes. Okay. The second type is a teacher loan forgiveness. So for any folks who are thinking about going into education, becoming a teacher, with this one, you must teach full time for 5 consecutive years in a low income school or educational agency. And this only applies for subsidized and unsubsidized loans. So just keep that in mind. Forgiveness can be up to 17,500. And if you've defaulted on your loans, unfortunately, they will not qualify that. So again, one other reason why it's best to stay out of default with your loans. This next one is called the Borrower Defense Loan Discharge. So this one's a little bit new. This one is for folks who were enrolled or stayed at a school based on deceptive information or institutional misconduct. They experience financial or educational harm severe enough to justify a total loan discharge. And this only applies again to federal direct loans. So this includes a subsidized, unsubsidized, Parent Plus, and Grad Plus to be eligible for this. So this one is mainly for a select group of students. Not everybody will qualify for this, but just note this is another third type of forgiveness plan available. And this is based on, I believe, a lawsuit that happened. So for the folks that qualified, they would have received communication about this. But just note this is the third one. And then the last one is the total and permanent disability discharge. This relieves eligible borrowers from the obligation to repay federal student loans or complete a teach grant service obligation. So there are three paths to eligibility. The first one is the U.S. Department of Veterans Affairs documentation showing a 100% service-connected disability rating or being totally unable to do disabled based on an individual unemployability rating. The next one would be Social Security Administration. So documentation showing eligibility for SSDI or SSI with a medical review scheduled within 5 to 7 years. And the last one would be the medical professional certification. So an MD, DO, nurse practitioner, physician assistant, or psychologist certifies a disability that can be expected to result in death, has lasted for a continuous period of at least 60 months, or can be expected to last for a continuous period of at least 60 months. So this is the last one available. If you want to read more about it, again, go to studentaid.gov. Okay. Any questions before we enter the last section of our presentation? All right. So I will just briefly talk about, preventing scams because unfortunately it has happened to students, and so we don't want that to happen to any of you here. Um, First things first, 3 ways to spot student loan scams is kind of what I was saying earlier when I was talking about loan consolidation. Everything is free. Like the process should be free for when you get help regarding your student loans. So if you are asked to pay, for example, an upfront cost or monthly fees, you're promised immediate loan forgiveness, or you're asked to provide your FSA ID and password, mo most of the time that's a scam. And so we just want to make sure that you don't pay for help when you can get it for free. Okay. Okay. And then what to do if you have been scammed. So you want to log in and change your FSA ID, and then the same applies to um, if you have a dream loan. If you've noticed that someone has logged into your account, you want to make sure that you make those changes. Um, Next thing too is to contact your loan servicer to revoke any power of attorney or third-party authorization agreement that your servicer has on file. You also want to make sure that you contact your bank or credit card company and request that your payments to the student loan debt relief company be stopped. And lastly, that you report your complaint to the Federal Trade Commission. All right. So kind of just to recap, I know I talked a lot about just repayments in general. First things first is you want to finish your exit counseling plan. So do that as soon as possible. Pretty sure by now you've received communication if you are graduating at the end of spring quarter. But if you still have time left, just know that that's one of the first things that you want to do. Number two is whichever repayment plan you end up selecting, make sure that you are making payments on time. And the last thing to do is to default on your loans. So, as we saw, there are options available if you are experiencing financial hardship. Um, if you are a federal loan borrower, definitely check out the loan forgiveness programs if you are eligible for them, because it can help in the long run. And then lastly, you want to just be aware of student loan scams. Um, all right. So with that being said, that is all that I have for you today. Um, if you have additional questions, the floor is open now. I think I saw one in the chat. Um, okay, I think someone had asked about the interest rates. Thank you, Brenda, for answering that. So the interest rates do change. So you just want to make sure that you're aware of that. You could find that on studentaid.gov. You can also go, if you have the federal loans, on your FSA dashboard to view what the interest rates are on the loans that you've taken out. And the same can be said if you've taken out a dream loan. Um, but in the meantime, as you are thinking about questions, I greatly ask that you fill out our evaluation forms. So the QR code is on here, and Brenda has also posted that in the chat, the link. Your feedback is extremely valuable, so please be honest. You will not hurt my feelings. Our goal is always to improve the services that we provide to our students. So it'll take just a couple of minutes, but as you're working on that, any additional questions? No? Okay. Just a few other things that I do want to add on here. We do have one more workshop for this quarter. It's Life After UCR. So again, if you are graduating soon, this is a really great workshop about just what to expect for life after UCR. What are some expenses that you might have to consider that you didn't have to consider now as a student. So that's going to take place on Tuesday, May 26th in the Tartan and Tweed room in the Student Services building from 2 to 3 p.m. and we will have food available. So we will post this flyer on our Instagram account at UCR Finwell by tomorrow. But just know this is our very last workshop of the quarter. And then I think I see in the chat, so there is 6 month grace before I need to pay back subsidized loans. Yes. So if you have a subsidized, unsubsidized, and a dream loan, you will be given a grace period of 6 months after you graduate from UCR. And during this period, you're not required to make payments on your loans. You can if you want to, but you don't have to. And then after the 6 month grace period ends, that is when the repayment begins. And so your loan servicer should be in contact with you, letting you know, like, hey, it's time to start making lo loan payments. And so we kind of just go from there. And then I'll just end here, just our contact information. So our website is go.ucr.edu/finwell. Our email is financialwellness@ucr.edu. And then if you haven't done so, our Instagram is at UCRFinwell. If no more questions, you're free to go. But I will stick around for any folks that do have additional questions. Thank you so much for coming out. And it looks like there's a question about if there's a grace period for students transitioning from undergrad to graduate school. Typically, if you are like, let's say you're going straight from undergrad to graduate school, your loans will be put in automatic deferment. I would still recommend that you contact your loan servicer just to ensure that they are. But yes, typically, like if you're not going straight to graduate school, you will enter a grace period of 6 months. Someone asked, is there a grace period for unsubsidized loans? Yes. The grace period applies if you have unsubsidized, subsidized, and a dream loan. With the Parent Plus loan, it begins immediately, repayment, but your parents can request a deferment for while you're in school, and so for payments to begin, typically, I believe 6 months afterwards. Someone asked, can you explain the process of telling your loan servicer you are unemployed? You would just need to contact them and let them know that right now you are experiencing unemployment or financial hardship, and they will direct you to fill out the appropriate form. Um, so I would recommend you do that as soon as possible if you are experiencing that, so that way they can have that on file and you can get that process started. Um, and then, yes, someone asked if there was a check-in. There was. Brenda will go ahead and put in the chat again that form for you to fill out. Okay. And there's another question. How will loans work if I take a gap year in between graduation and graduate loan? Very similar. So let's say you decide to take like a 1 year or however long your gap will be before you go to graduate school. You will have that 6 month grace period. And then after the grace period ends, you will begin repayment. But then once you begin graduate school, you will just need to communicate to your loan servicer that you're going to graduate school so that way your loans can be in deferment. Someone asked, thank you. Does that mean the interest will accrue or stop? So during the grace period, interest will not accrue on a subsidized or dream loan, but it does accrue if you have unsubsidized and a Parent Plus loan. So just keep that in mind. And like I've said, during the grace period, you're not required to make payments on your loans, but you can if you want to. Any other questions? These are great questions. Um, could you briefly explain how the deferment process for graduate school? So basically, you would just need to contact your loan servicer, let them know that you want to enter into deferment for your loans because let's say, if you're starting graduate school, this is why. Um, and you kind of just go from there, and they'll direct you to fill out the appropriate forms. They will most likely also ask you, like I said, most of the time this should be automatic, but sometimes it's not. And I've seen this more if you've taken like a gap year. They will ask that you provide documentation that you are enrolled in a graduate program. So all of that will be through your loan servicer, but the first step is just to let them know that you want to enter the deferment for XYZ and then kind of just go from there. Okay, someone asked, I meant if you aren't employed, does the interest still accrue? It does, yes. But just depending again which option you choose. So let's say, for example, you are unemployed and you decide to defer on your loans. Um, Basically, interest will not accrue if you have subsidized loans, but it does accrue if you have unsubsidized and Parent Plus loans. If you go with the forbearance option, which is basically the same thing. Deferment and forbearance, it just means you're pausing payments on your loans. But if you choose the forbearance option, then interest accrues on all of these types of loans, the subsidized and unsubsidized, regardless if you are unemployed or not. Hopefully that answers your question. Any other questions? No. All right. Well, I will be here for a few more minutes if you have questions. But if no more questions, thank you so much for coming out. I am just gonna go back to the evaluation form. If you didn't get a chance to fill it out, like I said, your feedback is extremely valuable. So thank you so much for coming out. And I'll go ahead and stop recording here.